Bismillahirrahmanirrahim. What is up, guys? My name is Hassan, and welcome back to another dividend investing hashtag good investing. You guys can see that my portfolio has reached 26,000. It is actually above the $25,000 threshold. That means that I can actually day trade. But that doesn't mean I'm going to do that because I heavily recommend everybody to stay away from day trading because it's very unpredictable if you don't have a very specific method. Even people who have a very specific method, they don't tend to do well. So you guys can see my holdings on the right. But now before we show you guys my buys and sells, I want to quickly go over the market. So I'm going to take you guys to S&P 500. We can see here this is the S&P 500. If we look at it for the 1 month, it's up about 4.5%. But if we look at it for the 6 months, and if we pull up for the month of September, it was actually September 2nd. And if we go to like currently or up to September 2nd, for the last 1 month, it hasn't been doing really well. We can see that's up or actually down about. We can see that for the month of September was very choppy, but as a dividend investor, this is actually very good for us because we continue to receive our dividend payments even the market is going up and down. But we can see here there were couple of dips that here as a smart investor we should be constantly buying these dips. Any opportunity we get, we should be taking advantage of it. A lot of people I have asked, are they investing? Some of the people are saying no, we're in the middle of an election, we're actually waiting for the election results to come and then they're going to invest. So again, they're making a wrong move. They are trying to invest, or they're trying to time the market, saying that we should never try to, instead of timing the market, we should spend more time in the market. So time in the market is way better or more beneficial than to timing the market. So another thing that I want to point out, that this is my 11th year investing, and I've been constantly investing month after month, adding money to our portfolio and having it grow. Before I show you guys what I've been buying and selling for the last 1 month, I like to look at the overall health of the market. And how do I do that? By looking at the job reports. And I'm also going to show you guys and explain to you guys what I have been buying and what I've been selling and the reason behind it. So I'm not just showing you guys my buys and sell, I'm explaining my thought process as I go along in real time. I try to do these updates as often as possible. As always, make sure you guys are subscribing. So right now we're going to be taking a look at the overall health of the market. Yes, the health. What does that mean? It does not mean the chart. We're actually going to look at the United States job report. So if we scroll down, this is how I tell how healthy our economy is, not based on the S&P 500. So if we look at the S&P 500 for the last 1 year, it shows us that it is doing really well. It is actually booming or doing really great. So for the last 1 year, the S&P 500 is up almost 18%. That is way above our average of around 10%. So by just looking at the chart, we're thinking the economy is great, but in reality, it's very misleading and it's very incorrect. That's why we like to look as an investor, as a smart investor, we like to look at the job reports. So here we can see the unemployment rate for September 2019 to September 2020. We can see that for before the pandemic, before this virus, the unemployment rate was around 3.5, 3.6%, which is great, which is amazing, because this is it's one of the lowest it has been. But once the virus have picked up, the unemployment shot up, and we can see that month after month, if we scroll down a little bit more, we can see the months that we can see here. April, it was around 14% unemployment, 13%, 11%, 10%. So as the months were going, our unemployment rate was actually decreasing, which is very, very healthy. But however, with the recent month of, say, July, August, and September, yes, the unemployment rate is decreasing. But however, the rate of decreasing has pretty much slowed down less and less, and which is very concerning for the market because it shows that this market is going to take a lot longer time to heal and to go back where it was. So pretty much this unemployment chart shows a more accurate picture of our economy versus the actual S&P 500 chart. As a good investor, we should be able to see this way or months before the chart starts reflecting it. That's why you guys are here. Make sure you guys are subscribing and supporting my channel, and that way I can continue to make these videos and motivate each other to be a better investor. So even though the market is slowing down or the economy is not increasing as it should be, I am still going to continue to invest. I'm still going to follow my game plan of constantly adding money to the market as much as I can and continue to buy these undervalued companies that I'm going to show you guys. As always, before I begin, I have to give you guys a quick disclaimer. I am not a financial advisor, nor do I know you personally or your financial situation. I am not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. Just because I buy them, that doesn't mean that you should buy them. Another important concept is that I'm not here to certify if certain companies are halal or haram, if they're permissible or not permissible. You guys are here just for a place to start your own due diligence. And remember that I am not an Islamic scholar. Yes, I am a Muslim investor and I invest according to the Islamic laws to my best of my abilities. But remember that you have to hold yourself accountable. And just because I buy something, that doesn't mean you should buy it. What if I sell it? Are you going to sell it? Another disclaimer that it's really important that I'm actually spending this time to make it clear is that all the information that I present to you guys are not mine. I get them from other people, books, articles, 10K, 10Q, magazines, various reports, videos, articles, different books. Only thing that might be mine is my emotion and my experience. As always, you guys should hold yourself accountable for every single move you do. I'm here to just provide some suggestions, but at the end of the day, it is your responsibility and you're the one who are making these choices to invest into these companies. And more importantly, when you're investing, you're actually becoming a owner of this company. So let's get started. I'm going to take you back to my Robinhood portfolio and we're going to show you guys how I have been doing for the last few months. So we can see here. So for one day, I'm up about 1% or $300. And if we look at it for 1 week, I'm up about around 3%. And then if we look at it for 1 month, I'm up about 3% or $759. And if we look at it for the last 3 months, we can see the chart is nice and increasing, slow and steady. For the last 3 months, I'm up about 12%. In other words, $2,800, which is a lot of money for me because it's really hard for me to save almost $3,000 in 1 month. But by investing, this is like additional savings or income that is getting added to my net worth. And that's why I'm encouraging everybody to invest wherever. It doesn't have to be the stock market. It could be real estate, business, skill. Remember, more you invest, you get back out of it. It doesn't always have to be monetary. And then if we look at it for the 1 year, I'm up about 22%. Another thing that I want to point out is that this chart that we see here, it's not 100% accurate because yes, I am up 22%, but this chart does not show us the dividend. So I get almost around 3% in dividend. So 22 plus another 3 is actually puts me around at 25% for the year. Yes, this is unrealized gain, but I would take 25% as a win. I'll take with that and I'll run with that. And now I want to show you guys my all-time holding because I want to be very transparent. I want to be very clear with you guys. So if you look at our all-time, I'm actually up around 19.8, so about 20%. If we look at the time here, around since 2017 June, so I'm up about say 20%, 19.8. We're going to round that to 20%. But remember, this chart does not show us dividend. For the last 3 years, we averaged around 3% in dividend. So we're going to take 20 and we're going to add it. We're going to pull out my calculator. 20 plus about 3% a year additional, so puts us around 29%. So for the last 3 years, I made about 29%, but we're going to divide that by 3 because it has been 3 years. We can see I'm averaging around 9 to 10% on average for the last 3 years in a row. My overall average is actually higher because I have a second account, which it's not public. It's a lot higher. In a humble experience, I make around 15%, at least 15%, even though here is showing us only around 10% a year. But even 10%, if I can compound my money for 10%, I will do really well. One of the most important things to do as an investor is to constantly be adding money. So now I'm going to show you guys. Yes, I'm going to show you guys my buys and sells, but I'm also going to show you guys the monthly deposit I have been making. So this is an Excel sheet. Remember, as an investor, you either have a pool of companies, so you guys should be making your chart. Now I want to show you guys the amount of money I have been adding to my portfolio. So we're going to go down a little bit and we can see charts right here, my monthly deposit for the last year. So now we're missing a few months. I want to quickly add those months, how much I have been adding. So this is how much I have been adding on a monthly basis. So as an investor, you have to be constantly adding money to your portfolio as much as possible. So remember that a lot of my videos are very academic. So you guys should be jotting down notes or in a handbook or a notepad, just key important gems that whenever I throw out there. So one of them is to constantly fund your portfolio. It doesn't have to be $200, $300, $400. It can be $50 a week. As long as you are consistent, it could be $25, $50, $100, $200 a month, but make sure you want to follow through and be consistent with your deposit. So we can see here, I've been adding money. So we can see around August, 480, September 240, 485, 200, and then the virus hit in February. All of a sudden, I added a lot more money with $1,400, almost $1,500, and then March $1,500, and then April about $2,700. And we can see here the reason why it's so high is because of the stimulus check. So I received around $1,200 in stimulus check, which went directly into the market because I want to grow my portfolio as much as possible because the Fed is printing money and inflation is occurring. So I want to make sure my asset is also increasing because remember, cash is trash and that cash is designed to lose money. So that's why directly the money that I got, it was easy come, easy go right into the market. So now we're just going to update your chart for the month of May. I deposited around $1,250 and it should show up right on the chart. Yes. And then for the month of June, around $850. And then for the month of July, a little bit less, $350. And then for the month of August, $680. And remember, this is extremely hard for me to deposit this money because I live in New York City and the budget is very tight. But remember, this is my future, this is my net worth. And in order to have something in life, I have to save. And in order to save, I want to constantly invest that money. So we can see here, automatic the virus kicked in, the market tanked. What I do, I invest more. The market starts going back up, I start investing less and less. And that should be the goal. When the market is down, you invest more. When the market is high, you invest less. But the key common theme here is that I am constantly investing and adding money into the market. So guys, if you guys made it this far, make sure you guys hit the like button. It really, really helps my channel grow and it helps YouTube algorithm know that this is a value. Remember, in the stock market, we're not against each other. We're all on the same thing. So as always, please subscribe and like the channel. There's one common theme is that majority of it at one point was around under $500. But if we look at the average, $759. So I want to just make sure we have this up to date. I'm going to change this to 17th. So we're going to update this to J17 and that should do it. And that puts our new average at $765. Remember, my goal is to have at least $500 in investing in the market. We're actually above that, which is a positive sign, and I am thankful and I am blessed to be able to invest more money than my target value. So the next thing that I want to point out is that if we go back to my Robinhood portfolio, currently it is at $26,000 and $26,200. And if we look at it, how much money did I put in? I put in 21. So automatically you can see here that I put in around $21,400, but I have $26,000. So I'm already up in the market in the last 3 years. So remember, more we put in, more we get back. Another thing that I want to point out is that when we're investing, we want to have a goal. And one of my goal is to take this portfolio of say 26,000, but as the years go on, as it grows, is to take this money and buy a house with it or buy real estate with it, and then start all over again. I'm saving up this money just so I can buy real estate, and that is one of my end goals for investing. So we just want to quickly put out our compound calculator. Remember, we said that the last 3 years I've been making around 10%, but it's real. In reality, it's 15%, but we're gonna go with 10% because that's what you guys see. So we see an initial investment of say $26,000. Set our monthly contribution. Right now, we'll take the average $765. Hopefully, if God willing, I can continue that $765. Length of years, we'll say 5 years. The estimated rate of return, we're going to do 10%. So we're going to calculate this. With my current $26,000 portfolio, with constantly adding around $765 in 5 years, I pretty much 4x my money. So this is the beauty of compounding, is that we have initial investment slowly. In the beginning, it's growing slowly, but eventually it starts picking up. So that's why you guys should also have a future projection. Not only you have your current projection or your current investment, you guys also predict what goal you guys have. So that way you have a goal in mind. Not only a goal, the end goal of buying that property, but a goal of as you're tracking. So as the years are going, year 1, year 2, year 3, am I meeting this goal? So by year 3, I should have around $65,000 in portfolio value. And this is very smart goal because we're tracking our progress. Remember, investing is very calculated risk, and we should be smart about it. And this makes us a smarter person. So now we're going to actually show you guys why you guys are here, are the companies that I have been buying and selling. I just want to show you guys the proof here is that all the sales that have occurred. So we can see that $10, $15. So I'm not going to show you any sale that is like under $25, but all my sales does exist and they're very accurate to the point. Anything under $25, we're not going to show you guys because it's just a very small amount. But anything above it, we're going to show you guys my buys and sales. Another thing that I want to point out is that I hold about 35 different companies. And one of the best things about having so many companies is that the monthly dividend that I receive. By having all these companies, if we just scroll down, we can see $10, $5.44, $7.48. Every few days, we're receiving dividend payment. And that's what a dividend investing is about. As a business, I need to receive some of those income that the company is giving because I am a legit owner and I have a say. Yes, we don't really control the company because we don't have enough shares. But theoretically, if we did, then we would be able to place or order or contribute or even have or elect board of directors on that company. But as an investor, only thing we do is we have a voting right. So we're going to show you guys the sales or the buys and sales for the month of September. So we can see here on September 2nd, I bought GPL. It's a gold company. I bought about 26 shares at 95 cents. So the reason the gold prices have increased, so this is a great opportunity to get into these gold mining companies. I do want to point out that I paid 95 cents per share. That is actually relatively a little bit higher, but I bought a little bit hoping for the company to go down, and you can see that, and that's exactly what I did. So again, we can see GPL, the price dropped to 91 cents, and I capitalized it. I bought another 27 shares. So as it keeps going down, I will continue to add into my investment. Remember, you never want to buy all at once and you never want to sell all at once. The next thing that I bought is KL or Kirkland Gold. I bought about half a share at $51.45. The next day on the 4th, I bought pretty much another half a share at $50.28. So next thing is Skyworks Solution. I actually made a stock analysis video on this. So make sure you guys check this out because This is a solid company with little to no debt, and they don't pay no interest. I bought around pretty much 0.18 of a share at $136. And then next thing I have is on the fourth, continue on. I made a lot of investments. On the fourth is I actually sold Shoe Carnival. I had I sold around 6.7 shares at 37. The reason why it's in green, that means that I made profit on this sale. I made money. If it was red, that means I lost money. So I made money on Shoe Carnival. Again, next one I bought is Nvidia. So automatically for the month of September, I bought 10 different companies. So we can see Shoe Carnival is another one, Nvidia, another solid company. I bought it at $483, and which is, I'm actually up massive on Nvidia because I have been adding it slowly because just high in price, I'm not able to accumulate as fast enough. Again, I can see we have Kirkland Gold. On the fourth, I bought another 1.5 shares or 1.49 shares at $50. And then pets, I'm buying more, 1.7 shares. Remember, since Robinhood came out with fractional shares, I'm trying to buy in small bit size pieces. And I'm not buying all one company. I'm just spreading out the wealth. And that way, I'm not too heavily focused on one company. If we look at my portfolio, yes, I do have around 35 different companies. But all these companies, I consider them as one holding because I'm diversifying. So I look at the overall. That's why you can see that the overall trend of my portfolio is up. I'm not going too heavily on one risk. Yes, my top few holdings are around 10%, 10, 11%, but normally I should be around 5%, even though you're missing out. So by diversifying, you're actually missing out on the gains, but when the downturn or when the recession or the correction hits, you actually protect yourself on going down. Most people look at how much money they can make. I look at how much money I could lose. So I'm trying to be a conservative, smart investor, trying to reduce my risk, but my end goal is always up. And we can see that directly based on my chart. So we're going to go back to our sales, buys and sales. You can see another oil company, MMP. I bought one share or 1.3. And then Shoe Carnival. Yes, remember what I talked about. Never buy all at once, never sell all at once. I sold another 8 shares at $36. And then we can see American Software. I bought at $13. And this was a quick short-term trade. Even if I have to hold it for the long term, I don't mind. But this is a company that is very overvalued. And this is just a quick short-term investment, which I really don't like to do. But I saw an opportunity, took advantage of it, almost $1 per share. And I'll take that and run with it because my overall trajectory or projection is long-term. Again, I'm buying another share, 1 share of Kirkland Gold. So we're going to continue on. And I made around, and then we can see Nvidia, bought more pets, Skyworks Solution, Gentex. These are all solid companies. And then one of my top holding is AMD, about 0.37 shares. Cloudera, check this out, an amazing, awesome company that you guys should take maybe if you guys are interested, or it's a very similar business model as Snowflake. So if you guys want, leave a comment in the description. Let me know if you guys want me to do a stock analysis video. Guys, remember, make sure you guys like and subscribe to the video. It takes a quick split of a second. And next thing I want to point out is Waste Management. I actually made a stock analysis video on this. Amazing company, but I did sell out of it. And I completely sold out of it. Yes, I sold 3 shares, but a few days later, I actually sold out my full position because of one main reason, is because of their debt. When a company has a lot of debt, I feel uncomfortable. They can't grow as fast because they're paying the debt or the loan back. And more importantly is because the debt has to do with interest. As a Muslim investor, we need to stay as far away from interest as possible. So we're going to pull up Yahoo Finance. We can see that this is Waste Management from Yahoo Finance. We're going to look at its financials. So if we look at the income statement, we can see, so if we look at this income statement, we have the gross profit, which is around $5.8 billion. So we're going to pull out our calculator, 5.8, and our interest expense is we're going to just go with this, 446,000. So we have 446 and we have 5,800. So I'm going to quickly pull out my calculator and I'm going to explain to you guys why I'm selling this company. And the company is paying interest around 446. We're going to divide it by its gross profit of 5,839, and we're going to get a number. And we get around, and we're going to times this by 100 to get percentage. And we get around, their interest payment is around 7.6% of their gross profit. And for me, that is way too high. Generally, we should not pay any interest, because as an individual, I don't like to pay interest. That means that I'm not efficiently managing myself, is because I'm borrowing money and I'm paying extra interest or extra money that is not benefiting me, because I'm borrowing money and I have to pay that money back more than what I received. So here they're paying for 7.6% of their gross profit is going towards interest payments. So normally anything I would invest in, or I follow the standard, anything below 5%. So if this was below 5%, I'll be a little bit more comfortable. But normally I look at 0%, 1%, or more importantly, if it was interest free. Those are the companies that we should be focusing on. As a Muslim investor, we should be looking at not 7.6%. It should be 0.000%. And that's what shows us is one of the best ways to tell if it's a efficient company, or if it's a awesome, amazing, well-run company, a company that pays no interest. More importantly, as a Muslim, we cannot deal with interest. And remember, this is a personal opinion, and I'm not here to tell you guys how to invest, but usually with companies that have zero to no debt or does way better, and even when the downturn comes, they do really well because they have no obligation. So we're going to take you guys back to our buys and sells, and we have Waste Management, and then we have Pets, Kirkland, another company, GPL, the gold company. The price dropped 88 cents. I would say is a reasonable price, or a good price, or a good entry point. And Gentex, I bought up almost 1 share, and then more of Cloudera. So this is another company. It's actually a growth company. I normally stay away from growth companies because they're not as efficient, or they're not as predictable versus a dividend company. Going with Cloudera because they have no debt, and that's one of the main reasons, and they're very similar to Snowflake. So right now we're going to take a question which is very related to a growth investing, or related to a company like Cloudera. So guys, now we're going to take a quick question which is very related to a company like Cloudera. So the question here is by Ian. He's saying that good valuation metric for small cap companies with no positive net income. So this is actually net income. Again, I'm going to repeat the question. The question was pretty much asked is, what are good valuation metric for small cap companies with no positive net income? Or in other words, pretty much they're talking about a growth company. So pretty much we're going to be talking about how to analyze, or what to look for when we have a small cap company. The person is missing a point here, because he's talking about small cap, and the process that we follow is pretty much doesn't matter if it's a small cap, mid cap, or a large cap. They all follow a very similar path, or a similar process. It doesn't matter what type of market cap company it is. So first thing we want to do is we want to look at the big picture. Will this company be worth more in 10 years than it is today? I'm going to repeat that. Will this company be worth more in 10 years than what it is worth today? So if you think that is the case, then you should definitely invest into that company, because we're looking at the bigger picture here. And more importantly, do we understand the business? And if we don't understand the business, it's going to be very, very hard and difficult to predict future predictions, because we're investing in something that we don't really understand. So it's really important that we understand the company. The next thing is that we're looking at the big picture. We understand the company. Are they growing their revenue? Are their revenues increasing at a 15% or higher? So it's important, are they growing their company? Do we understand it? Another thing is that, do they have a competitive edge against its competitions? The next thing we try to do is we want to look at, are we getting a fair deal? Is the company that we're investing in, has it been beaten down in terms of the chart? So in that way, we're getting at a bargain psychologically, so that later someone else, when they come in, they're willing to pay for it because they've seen that this company has been beaten down, and it psychologically tricks them even though the chart has no value. Hopefully you guys were able to understand that. Even though it's like people, if a company was $100, if it drops to $50, people are more willing to buy it because they'll think that, oh, it might go back to $100. So we want to look for a company that has been beaten down but still fundamentally solid, that their revenue is growing 15% year after year. Is that, do they have zero debt? We want to look at for companies that have zero debt or little to no debt, or now are they paying interest? As a Muslim investor, it is very important that we look for companies that pay little to no interest and they have zero debt. And that is just a golden rule of good investing. And simply put, and in order to predict a future value, the past trend have to be stable or smooth, meaning that the company has to be running smoothly in the past for it to continue to run smoothly in the future, because we want a company that is growing slow and steady, is not having these crazy fluctuations, but we want to have a solid company that is sailing, even though yes, it has some difficulties because no company is perfect, but it has a solid trajectory. So we want a company that did well in the past and that it will continue to do well in the future. So hopefully that was able to answer your question. A good valuation metric is such as looking for companies that are growing their revenue. We understand the business. They have a competitive moat and they have zero to no debt, and there is a solid company that will change the future or will generate a lot of cash. As always, we're going to wrap it up, guys. Continue to follow, continue to be a better investor. As always, thank you. See you guys next time.